The U.S. Federal Reserve is likely to cut interest rates before the European Central Bank does, a former member of the Bank of England said, defying current market expectations. I suspect that the Fed will be the first to really put a cut in, DeAnne Julius, a founding member of the Monetary Policy Committee of the Bank of England, told CNBC on Tuesday. Investors are closely monitoring central bank moves on the back of a considerable reduction in inflation across major economies. The expectation of reduced rates has boosted equity markets since late 2023. So far, Switzerland was the first major economy to cut interest rates back in late March. Market players are currently pricing in a 92.8% chance that the ECB will cut rates in June from the historically high level of 4%, according to LSEG data. The same database shows only a 53.5% chance of a cut by the Federal Reserve at their June meeting. Julius explained her forecast was based on the Fed's dual mandate, which looks at both inflation and employment in the U.S. economy. The latest job figures pointed to a buoyant U.S. labor market, and inflation has also dropped, though it is still above the Fed's 2% target. I think things move a little faster in the U.S., quite frankly. The labor market adjusts more quickly, she said. Strong economic data out of the United States has led market players to reduce their expectations for rate cuts from the Federal Reserve in 2024. Whereas at the start of the year, they were expecting about 6 rate cuts to take place in 2024, they are now only forecasting about 3 such reductions. The labor market adjusts more quickly. I don't think the Fed will move very much, but I suspect that there could well be a little move there, somewhere, towards the second half of the year, Julius added. And that would create a little space and maybe a little pressure even on the Bank of England, whose economy is, of course, tied to the U.S. economy, and the European economy. Her comments come just ahead of a European Central Bank meeting due on Thursday. Though the central bank is unlikely to change rates at this gathering, markets are looking for some clues on whether the institution led by Christine Lagarde will be in a position to cut borrowing costs in June. The ECB. It takes them a while to reach consensus. Because the situation is, inflation is far too high in some of the countries still, and below their 2% target in others. So, theirs is not really an economic analysis, it's partly a political and an internal weighting of the different economies and the different politics in the different economies, Julius said. So Christine Lagarde has a real job on her hands. And I think she does a good job. But that does mean that she's got to carefully move towards something that might be a consensus, and I don't think they're near a consensus yet for a rate cut.